Most business owners are leaving thousands of dollars on the table every year. They're missing a simple tax strategy that could save them serious money. Today, I'm going to show you exactly how to use credit card rewards legally to reduce your tax burden. This isn't some shady scheme. This is a strategy backed by decades of IRS rulings and court cases. Big corporations have been using this for years. Now you can too. By the end of this video, you'll know exactly how to implement this strategy in your business. You'll understand which rewards are tax-free and which ones will get you in trouble. Plus, I'll give you the exact steps to set this up properly. Let's dive in. Chapter 1, the foundation, why most credit card rewards are tax-free. Here's something that might surprise you. When you earn cash back or points from spending on your credit card, the IRS doesn't consider it income. Instead, they treat it as a discount on your purchase. Think about it this way. You buy a laptop for $1,000. Your credit card gives you 2% cash back. That's $20. The IRS sees this as if you paid $980 for the laptop, not as if you earned $20 in income. This comes from a 1976 IRS ruling called Revenue Ruling 76-96. It says that rebates from sellers don't count as income. They just reduce what you actually paid for something. This principle applies whether you get cash back, points, or airline miles. As long as you had to spend money to earn the reward, it's treated as a rebate. Here's a real example. Let's say you run a marketing agency. You spend $5,000 on Facebook ads using your business credit card. You earn $100 in cash back. The IRS doesn't see that $100 as taxable income. They see your advertising expense as $4,900 instead of $5,000. But here's where it gets interesting for business owners. This creates a powerful opportunity that most people miss completely. Chapter 2, the business owner's secret advantage. But really quick before I move on, if we haven't met yet, I'm Sean's clone, a licensed tax professional who personally researches and writes every script you see from me. And while Sean is helping people save on taxes, I'm here to share his knowledge with you. But if you have any questions, the real Sean reads every single comment and tries to respond to most. Also, if you need help with tax planning, click the link below to get a free consultation to start saving more money before the tax year ends. All right, let's keep going with Chapter 2. The business owner's secret advantage. As a business owner, you have access to a strategy that regular employees can't use. It's perfectly legal and incredibly powerful when done right. Here's how it works. You use a business credit card for all your legitimate business expenses, office supplies, software subscriptions, client dinners, travel costs, everything your business normally pays for anyway. These expenses are fully tax deductible. They reduce your business income dollar for dollar. But here's the key part. While you're getting those deductions, you're also earning massive amounts of credit card rewards. Now here's where the magic happens. Instead of using those rewards for more business expenses, you use them for personal things, family vacations, personal shopping, home improvements. Let me show you the numbers. Say your business spends $50,000 per year on deductible expenses. You earn 2% cash back. That's $1,000 in rewards. Your business gets to deduct the full $50,000. You save taxes on that money. But the $1,000 in rewards goes to fund your personal life, tax-free. This is completely different from using the rewards for business expenses. If you use that $1,000 to pay for more business costs, you couldn't deduct those costs. The IRS would reduce your deduction by the amount of rewards you used. The key is keeping business and personal completely separate. Your business card should only be used for business expenses. Never mix personal purchases on a business card. This strategy gets even better when you understand the timing differences between earning and using rewards. Chapter 3, timing your rewards for maximum impact. Timing matters more than most people realize. The way you earn and redeem rewards can make the difference between a tax-free benefit and a tax nightmare. Let's start with the safe zone. Any reward you earn by spending money is generally tax-free. This includes regular cash back, points from purchases, and most sign-up bonuses that require you to spend a certain amount. For example, a credit card offers 50,000 points after you spend $3,000 in 3 months. Since you had to spend money to get those points, they're treated as a rebate on your spending, tax-free. But watch out for rewards you get without spending. Some cards offer bonuses just for opening an account. No spending required. These are taxable income. The IRS sees them as payment for becoming a customer. Referral bonuses are another trap. If you refer a friend and get a reward when they're approved, that's taxable income. You didn't spend money to earn it. You provided a service to the credit card company. Here's where business owners need to be extra careful. Never let employees use company-earned rewards for personal benefit unless you're treating it as taxable compensation. This could create a tax mess for both you and your employees. The timing of redemption also matters. If you earn rewards in 2024 but don't redeem them until 2025, there's generally no tax impact until redemption. But this can get complex with business accounting. Understanding these timing rules helps you avoid the common mistakes that can turn a tax-free benefit into an unexpected tax bill. Chapter 4, the accounting side, how to handle rewards properly. Here's where many business owners mess up. They don't handle the accounting correctly. This can cost you deductions and create problems with the IRS. When your business earns rewards from spending, you need to reduce your expense deductions by the amount of rewards you use for business costs. This is non-negotiable. Let me give you an example. Your business buys $10,000 in equipment. You earn $200 in cash back. If you use that cash back to pay for more business expenses, you can only deduct the net amount you actually spent. But remember our strategy from earlier? If you use those rewards for personal things instead, your business keeps the full deduction on the original $10,000. For your books, you have a few options. The simplest is to record rewards as a reduction of the expense they came from. So if you earn cash back on office supplies, reduce your office supply expense by that amount. Another option is to record all rewards as other income. This separates them from your main expenses but might not reflect the economic reality as clearly. The key is consistency. Pick a method and stick with it. Document everything. Keep records of what expenses generate, what rewards, and how you use them. If you're not comfortable handling this yourself, work with a bookkeeper or accountant who understands credit card rewards. The cost of professional help is worth avoiding mistakes that could cost you thousands. Your accounting method affects more than just your books. It impacts how much tax you pay and whether you're compliant with IRS rules. Chapter 5, Advanced Strategies for Maximum Benefit. Now that you understand the basics, let's talk about advanced strategies that can multiply your benefits. First, optimize your card selection for your business spending patterns. If you spend a lot on advertising, find a card that gives extra rewards on advertising purchases. If you travel frequently, prioritize travel cards with strong earning rates. Consider the manufactured spending question carefully. Some people buy gift cards or money orders to generate rewards without real spending. A 2021 court case called Anarchy v. its commissioners showed this can be risky. The court said gift cards might be okay since they are products, but direct cash purchases like money orders are definitely taxable. Here's a safer advanced strategy. Time your major business purchases around new credit card sign-up bonuses. If you need new equipment anyway, apply for a card with a big bonus and use that purchase to meet the spending requirement. Another powerful approach is using business credit cards to pay taxes. Yes, there are fees, usually around 2%, but if you're meeting a spending requirement for a valuable sign-up bonus, the bonus value can easily outweigh the fees. Stack multiple cards for different categories. Use one card for office supplies, another for advertising, and a third for travel. This maximizes your rewards across all spending categories. But remember, with great power comes great responsibility. The more complex your strategy, the more important proper record keeping becomes. These advanced strategies can generate serious value, but they require careful execution to stay on the right side of tax law. Chapter 6, Common Mistakes and How to Avoid Them. Even smart business owners make costly mistakes with credit card rewards. Here are the biggest traps and how to avoid them. Mistake number 1, mixing personal and business spending on the same card. This is the fastest way to lose your business deductions and create an accounting nightmare. Keep them completely separate. Mistake number 2, assuming all rewards are tax-free. Sign-up bonuses without spending requirements, referral bonuses, and bank account bonuses are all taxable. Many people learn this the hard way. Mistake number 3, letting employees use company-earned rewards without treating it as compensation. This creates tax liabilities for both the business and the employee. Mistake number 4, not adjusting business expense deductions when rewards are used for business costs. This overclaims deductions and could trigger an audit. The solution to all these mistakes is simple. Create clear policies, maintain detailed records, and when in doubt, consult a tax professional. Click the link below to get expert help. Because remember, the goal is to optimize your taxes legally and safely. Shortcuts that seem clever often create bigger problems down the road. The bottom line is simple. As a business owner, you have access to one of the most powerful legal tax reduction strategies available. Use it wisely, document everything, and enjoy the benefits. Because this strategy isn't going anywhere, it's based on fundamental tax principles that have been stable for decades. The IRS has consistently supported this treatment because the alternative would be an administrative nightmare. But like any tax strategy, the rules can evolve. Stay informed about changes and adjust your approach as needed. If you start implementing this strategy today, your future self will thank you when you're taking that family vacation funded entirely by rewards from expenses you were going to pay anyway. Coming up next, I have a video on essential legal documents every small business needs. So click to watch that next, and I'll see you over there.